it's a mess. You've seen what's going on with the Terra ecosystem as well. I mean,
Yeah.
they're actively selling Bitcoin. I hear, Jump in that whole equation is selling Ethereum. It's just liquidation of everything. And it's interesting because it's spilling out into the macro world as well, obviously. It's like stuff like oil, which was like the last thing that was holding up the inflation narrative, is starting to get properly clocked. Everybody, I think, in every position is about to lose money. It's a total fucking shit show out there. It's everything, right? We're starting the big liquidation phase in pretty much everything. I'm looking at stuff like Galaxy's down 25%. I mean, Novo
Oof.
can't be very happy about that. He probably has to send the keys back on his yacht or something. But it's a mess. You've seen what's going on with the Terra ecosystem as well. I mean,
Yeah.
they're actively selling Bitcoin. I hear, Jump in that whole equation is selling Ethereum. It's just liquidation of everything. And it's interesting because it's spilling out into the macro world as well, obviously. It's like stuff like oil, which was like the last thing that was holding up the inflation narrative, is starting to get properly clocked. Everybody, I think, in every position is about to lose money. So inflation, we've had this really complicated macro situation where we had supply chain shocks, which was people can get factories and ships sorted out because people were still in lockdown with COVID. There was a massive backlog of orders, and this filtered through, and that raised prices because everyone, if there's a shortage of goods, if you pay more, you get the goods, right? So that puts prices up. Then we start to see issues in the commodity sector that have underinvested. So everybody comes online again. Everybody wants oil, gas, everything else. So commodity prices start exploding. Then we add on a Russia-Ukraine war and the penalties on Russia, and that takes a bunch of commodities out of the market. So now we're in this perfect storm of prices rising. But people are also scrambling, like all of us, probably you guys as well, to try and hire people. So we're all bidding up wages. But wages, outside of some jobs, aren't rising as much as prices. So what we've got is this situation where wages have gone up, let's say 4.5%, and prices have risen 8.5%. So everyone's taken a 4.5% or 4% haircut in their net worth. Now that hit crypto. It started as soon as inflation happened, because if you think of crypto as a groundswell movement, basically the dollar cost averaging by average people who are in the space had started drying up, and we saw all the on-chain activity basically flatten out. And we've been in this sideways sloppy range because we've seen no network growth across the entire ecosystem. Within crypto, we'll talk about that later. But so that slowed down there. But we still had the kind of after effects of stimulus, people coming online. So economies were growing, but it now looks like all the forward-looking indicators are starting to roll over and start to show recession, because you've basically given everybody a income haircut. So discretionary spending is going down the toilet. We're seeing it in things like restaurant spend. We've seen consumer credit going up. So people are desperately trying to borrow money to maintain their expenditure plans. We've seen mortgages go up by the most in history as a percentage. They've absolutely exploded higher. We've seen 2-year interest rates with the largest 1-year rate of change in all recorded history. So what we've got, if you add all of these things, and we've seen the US dollar going up fast, when you put these things together, what you've got is the fastest tightening of monetary conditions in history. And we've seen it. The big tech companies are all starting to lay off staff. They're all like, holy shit. Even Amazon said we're overstaffed. So we've completely turned the economy from, oh, great, we're coming out of recession from the pandemic, to, oh my God, we're going straight back into recession. The market's tightened before the Fed even got round to doing it. The market did its job, and it stopped economic growth dead in its tracks. Europe's already in recession. China looks like it's in recession and is in lockdown again. To complicate the picture, we don't know what that means for supply chains. So we might have these, I think inflation falls, and I think the Fed pivot soon. It's like 2018. But 2018, the S&P was down 22%. It's only down about 15, 16 now. So I think there's more pain to come before the Fed suddenly realize that growth's gone. And the bond market will tell us that first. It always does. Yields will start falling And that will be probably the signal, as we had in 2018, crypto stabilizes, the growth end of equity starts stabilizing because they realize that some stimulus is coming. And so there's a lot. It's a bit of a monologue, but there's a lot to get through. Now, if inflation is still high-ish, because it's going to take a while to come down, but I think it comes down pretty fast. But let's say it's still at 5% and the economy is now headed directly into recession, what do the Fed do? Well, they're unlikely to purely stimulate because optically that doesn't look right. So my guess is they'll do what Europe's starting to do and Japan's starting to do, which is direct transfer payments that I've been talking about for a while, which is basically MMT. So i.e., you give money to the people who need it to cover the costs of their bills going up, and you basically finance it by buying bonds. So I think we're going to see stimulus coming faster than people expect in certain parts of the economy. In Europe, they're doing it for corporations who've got high energy prices, and they're doing it to households. Japan's doing it to households as well. So it's coming. So there's a lot. There's this transition from inflation to demand destruction to stimulus. That cycle is in play.